Marksman Capital Presence.
How many of us ask this question? Are trend lines really reliable? Now, since the first day you started trading, you have always seen these kind of videos about trend lines, educational websites, free. And this is since 20 over years ago. I've seen this kind of sources in the internet. But the second question is, are they really there for your benefit? All right. So I have my set of answers for you on the trend lines. All right. So let's move on. So before I move on, here's the disclaimer. Pause the video and read it. Okay, so let's move on. So here's the age-old axiom: the trend is your friend. And here's a few simple rules that we could follow, all right, to actually trade the trend line strategy. So rule number one is to catch the bounce at the trend line. And of course, let's say if we have a consolidation right here, and as soon as the price breaks the consolidation, and we have a higher high, and this is where we mark at least two of these points diagonally, and take these 2 points right here as a reference point. So we anticipate the next point will be bouncing off this diagonal line, and so we have a trend, right? So this is how trend line practitioners, they actually trade trend lines. They buy at the bounce of the trend line. So this becomes a buying point right here. So as it forms another high and they wait for another retracement, or you might call it a correction, all right, which comes again back to the diagonal line, and this time hopefully also with some confluence. And this is what we call confluence, where a broken resistance becomes a support. So, and if this confluence come together at the same time, most traders believe that that would be the higher possibility that price would actually bounce over there, right, at that particular point. So again, this is anticipated to be a higher low for the next bounce, and that is another buy point. All right. So here's the rule that most of the trend line practitioners look at, and this is always perpetuated in the internet source free out there. And secondly, the trend is your friend until it ends. And also, this is also a very popular phrase that you always see. And let's say if we already had a trend that's so obvious, bouncing about a few times, respecting the trend line, and the next price, it came through the trend line, and this is where most of the sources says that, you know, if it breaks the trend line, the rule is to sell at breaking the trend line. So that's where most traders will start to sell, right? So again, if it goes further downwards, and if you miss your opportunity on selling this part, and if it retraces higher, revisiting this confluence level, where they call it technical confluences, and this is another selling opportunity, right, for trend line practitioners. And it comes with, you know, it comes with a constructed narrative that says that, and this is also where most traders understand that this is the head and shoulders pattern, right? You have left shoulder, you have the head, and if it breaks the trend line here, and it comes back at this point here, then this is the selling point before it starts to go downwards. All right, so looks convincing. Let's go further. Now, again, we always know that this is the selling point. If you miss the first selling point, then the second chance that it comes up all the way to this high, and most people call it double top. All right. So if you know breakout patterns, you will see this as a double top. So if it breaks the trend line, it means also the trend has changed. But technically, this is what most of the sources says out there. All right. Then this is also another selling opportunity. And if it breaks the neckline, this part neckline, this is what most people call it a neckline. All right. So neckline, then it is also a selling opportunity. Right, so now let's get practical. Let's look at real charts and look at some of the stocks that we are familiar with. Most of us preferably want to long strong fundamental stocks. All right, if not most of us, will be all of us, preferably want this long fundamental stocks, strong fundamental stocks. So let's say, for example, this is a household name that most of us know, Apple. And let's say just right after the dot-com bubble, it burst, crashed, and then there's a long consolidation, about a few years. Now, the longer the consolidation, the stronger the rally is, right? So this is where most traders are expecting a rally after this when it breaks out from this line right here. We call it a neckline or significant resistance. So it breaks out from the significant resistance, and this is where most trendline practitioners, they have to always start to identify at least two points, all right? Two wave points. So from the low and the higher low. So they connect those dots, and the next one they want to anticipate there's a retracement down here to the third point, and so on, right, on the diagonal lines. So they could buy over there. Now, here's the thing. So this looks very mechanical. And the thing is that not all the time it actually respects the trend line. It's very subjective. So, and some of the trend lines are not even drawn as is placed. So some some trend lines they are drawn. Let's say if it forms, if you see up to this point right here, there's another point here that some people they just draw something like this, another trend, but it doesn't even retrace down there. So here's a strong rally. There's always a risk if you actually rely on trend lines, you would start to miss out on strong rallies, and especially this is on strong stocks. All right, here goes example number one. So now again in the Apple, so this has been trending for some time, and you see clear wave patterns forming. So before that, the wave pattern right here wasn't okay. It wasn't really even a wave pattern. It was just like small price movement, and suddenly you have wave patterns are coming in more distinctively, and you want to connect those dots. You want to connect those points. Let's say this is one of this point here, and you might want to draw a trend line this way. All right, so this is right at the bounce there. And here's what most trend line practitioners anticipate. So if this after this rally, they wouldn't want to buy the high. All right, so they always want to buy when it retraces. So and then this is what they anticipate. So all right, so it comes to this point, uh, and if I zoom in a little bit more, you can see there's a clear price action right there, which is there's some rejection. So this is in weekly candles. So maybe I zoom in a little bit here. It forms some rejection. There's some shadow right there, and you can see that there is a horizontal support. There's some convergence happening right here at this point. So there'll be a lot of people buying at this point because this is where they anticipate the price to rally. All right. So and then what happens is the trend line it is broken. So as a trend line practitioner, and this is where you start to sell the position out, and this is also where short sellers would come in. So you have panic sellers and short sellers coming in. All right. So this is where a lot of stop losses. If you have long the trend line here, and if you're a swing trader, you would have placed your stop losses right here around these areas. So this long red candle has been taking out a lot of stop losses, right? And this is also where if I want to trade, really want to trade trend lines, and this is also where I anticipate if the price closes upwards, all right, closes upwards. So and decisively closing upwards for a few weeks or for a certain amount of time, right? So right here after this horizontal support and after this candle, right? This is all even at this candle right here. So it closes upwards decisively, and this is where I will take in a bullish position because the fundamentals are strong. There's stocks as well, right? We won't go through too detailed in fundamentals today, but we'll just show you some examples where other fails. So as you can see, if a trend line practitioner, if they buy here, they would start to place stop loss over here, and then they would get kicked out. And if they sell over here, they will get kicked out over here. So just relying on trend lines, you would all right, you would miss out strong rallies. You would actually have a risk of buying and selling at wrong times. So this is actually the second risk, right? Not just missing out rally. No, here's another example in Microsoft, another household name. So again, after long consolidation, it breaks out important resistance level, becomes support, and as a trend line practitioner, that they'll start. Doesn't matter if you're an investor trader. So I zoom in a little bit. So we were here. We look at the whole big picture. Zoom in a little bit. We saw wave going up, clear waves going up, right? So you could actually connect these dots and these dots right here, you know. But you see, it's very subjective. You could connect that, and you could actually form something like this. But the thing is that this angle is not too sharp, right? So you see, and most of the time, if you actually connect these two dots right here, even if it's a before breakout, then you would see most people will start to sell over here, and the price will start to rally without them. Okay, so now the rule is always to actually, if there's a clear breakout and you want to buy, if you want to buy at the next retracement, if you miss out this one, all right, you would want to, all right, if you miss out this one and this has been rallying, you want to buy at the third point, clear trend line patterns, right? So this is what you really want to buy at this area right here. Okay, so the thing is that it's not so mechanical. And this is another strong rally you would miss out if you're still relying on diagonal trend lines. All right, so here's a recap right here. So if we are going along on strong fundamental stocks, it tends to change in angles. All right, so they have very exponential behaviors. Uh, Actually, in all strong fundamental stocks, they don't go up in a 45-degree manner. So over a long period of time, they would go up in exponential behavior. All right. So so trendline traders tend to miss out strong rallies. All right. So there's a risk right there. Second, the risk of selling and buying at the worst times, that, like you saw just now. Sometimes price temporarily breaks downwards to attract liquidity, where before continuing the trend upwards. And this is also for strong fundamental stocks. All right. So, well, let's end this video. I hope you enjoy this video. Happy trading and investing here. Striker X signing out. If you like this video, please hit the subscribe button and also notification button if you like to get more of these videos. And we also have a Facebook group where we call Global Financial Markets Trade. And we will provide the link below in the description column.